Welcome to another edition of Readact TV. I'm Don Friedman, President of the RIA Digital Assets Council. Today we have Jack Tatar, Managing Partner of Doyle Capital Management. Jack, welcome to the show.
Don, thanks for having me. Always a pleasure to speak with you.
So the first question we have for you, it's a very popular one we're getting from financial advisors. And that is, what does it mean when an investment vehicle like GBTC trades at a discount? And why is that happening? And should investors expect that to be a common occurrence?
Well, this is a very interesting topic and a very interesting concept, which has actually occurred because many of us never thought we'd see a situation where GBTC would be trading at a discount. It's always been held up as something that would be trading at a premium, and it would be really good for the investor because the investor gets the underlying value of Bitcoin in there and they get a premium. Well, what we've seen now is we've seen that it started to trade at a discount, really for the first time ever. And I think a lot of this has to do with the reality that even though the SEC has not approved yet an investment vehicle like an ETF, people believe it's on the horizon. There are other investment options that are out there that are not strictly like GBTC, that are which trades just strictly in Bitcoin, but there are starting to become other investment vehicles out there that'll give you some exposure to Bitcoin. And the other point of this is, I think people have gotten comfortable with buying and investing in Coinbase. And so we know, I mean, Coinbase is coming public. You know all the numbers about how many accounts they have. And what has happened is you've got people investing in Coinbase on their own, which is great. However, it doesn't provide the ability for a financial advisor to get involved with their client and advise them accordingly. So because the SEC has dragged their feet here and not approved an ETF, we're seeing investors getting more comfortable doing things on their own, which without the advice of an advisor could be detrimental to them. And we're also seeing some other options on the horizon that aren't strictly just solely investing in Bitcoin. So I think this point about a discount, it's an interesting thing because I think that there's still an interest from investors to invest in this. But now GBTC is not not the only game in town, and that's going to continue. I do think you're going to see at some point the SEC will step up, and when they do step up, you're going to see not one ETF, you're going to see probably 5 or 6, 7 ETFs, many of them from established players in the field, and people are going to start looking at this and they're going to say, is the GBTC investment better than these other ones? So this is going to be a very interesting point that's going to come up. But it also goes back to, I think, the point that people have grown comfortable investing in Coinbase. But it's also important to bring in the financial advisor aspect to it. And that's why we've got to see a product like an ETF start to get approved by the SEC to allow advisors to provide that guidance.
So a follow-up to that, what do you think and what do you expect Grayscale is going to do? And how do you expect Grayscale to respond to this current situation?
Well, I would imagine at Grayscale, and my understanding is Grayscale does have an ETF application on the desk of the SEC. So I think they're looking to do that. But the other thing that we've already seen them do, which is a very, very interesting concept, is that their parent company, DCG, Digital Currency Group, has actually stepped up and bought, I think, $250 million worth of GBTC. It's in essence a stock buyback, really, for the most part, to prop up the price. So it's a nice situation to be in when your parent company comes along, and it's almost like the kid coming in and like, Dad, I ran out of money in college, bail me out. And they have the ability to bail them out and raise the price. So that's my understanding of what's going on here. That how Grayscale's reacting to it, but it also shows that the structure of the product is such that to do something like this is the way to prop up the price and the share buyback. And I'm not sure that that's the best structure for investors overall.
So that kind of leads into our last question is, are there other Bitcoin-based investment products available to investors?
Well, GBTC is an investment trust that trades on the pink sheets. The OTCQX. So that does not allow it to be traded by uh, many investment firms. Certainly not wirehouses. They don't want people to invest in that type of thing. And the structure is such that it's very restrictive. If you are an accredited investor, you can buy into the trust at net asset value, even if it's trading at a premium. You can buy in net asset value, but then you've got to hold on to it for a period of time, I think a year, before it then trades on the pink sheets. There are other structures out there. One of the structures that I'm familiar with is a structure that's up in Canada that 3IQ, which was the first firm to get regulator approval on an investment vehicle for Bitcoin. They decided to come out with a closed-end fund structure rather than a set ETF. Now they've just gotten approval on an ETF for Bitcoin. They've also gotten approval on an Ether ETF. But this is up in Canada where they do things differently. They have a little more forward thinking, but that's a whole nother topic. But the structure of the open-ended fund is very interesting. In speaking to the people up there, and I do, at full disclosure, I am an investor and an advisor to them, so I know the product closely. But when they decide to go with the closed-end fund structure, there are mainly two reasons for it. First was it was a little bit easier, they felt, to get that approval than the ETF. And secondarily, there's the case when there are situations where there are discounts, they can do an at the market offering, which allows them, because of the fund structure, allows them to buy Bitcoin within that investment vehicle, put it into the investment vehicle, and then it's accretive to the shareholders. So the shareholders actually benefit from that type of structure. That can't happen with an ETF, but it can happen with a closed-end fund. So and they do have a higher fee for that fund, and it's been criticized. But then when you start looking closely at this vehicle and the way it works, you start to realize that it has a fee for specific reasons, and one of those reasons is this ability to go in and buy it. So it's a closed-end fund structure. Like I say, they're going to have ETFs out there as well, but it's important for investors and advisors to understand the types of investment vehicles out there. So they may start to see ETFs coming out, and then you have to make a decision: which ETF should I invest in? This one, that one, and they've got to really pay attention to what's in there, fees, and all those other things. But it's important to also take a look at things like a trust structure, which is what GBTC is, and a function, closed-end fund like QBTC up in Canada, which gives you the ability for when there are discounts to go in and buy more Bitcoin, which is advantageous to the investor. And as we get more and more products out there, we may see more and more of this situation where there'll be discounts for this type of thing. So it's going to be important for advisors and investors to understand the products that are out there, not just say, "Hey, we've got an ETF, let's go buy it, let's go do it." There may be some other structures out there that could be advantageous for investors as well.
Jack, this has been hugely insightful. We thank you for being a guest on Readact TV.
Thank you, Dom.